Hi, I'm Baldwin Burgess, and I'm here with Mark Watts. How are you doing, Mark?
Very good, very good.
Welcome to Dubai.
Thank you.
You're based in Abu Dhabi.
I am, yes, yep.
Absolutely. We're at the Fund Forum Middle East 2013, and this event we speak about this region, the global growth area. We speak about obviously fund management. And Mark, you're the head of the fund management division at the National Bank of Abu Dhabi. Is that right?
That's correct. Yep.
All right. It's a big place. It's a big known brand. Tell us a little bit about what you have been seeing. What have been the fund flows from your core clients? What does that look like?
Well, to answer that question, we'll go back to 2008.
Okay.
Because I think the post-2008 environment was massively different to pre-2008.
Oh yeah.
Pre-2008 was typified by a love affair with equities, big bull market in the region, lots of people made money. Mm-hmm. But that sowed the seed of its own destruction. A bubble was created, which eventually burst, and really a lot of people fell out of love with equities.
Yeah.
That's when fixed income came to the fore.
Okay.
The Fed's rate cutting environment buoyed general fixed income markets. Yields were quite fat, and clients were being forced out of deposits into fixed income just to get the yield, the yield effect.
And these are usually local issues, or is this generally?
Yeah, actually, because this is a relatively young region from a financial market point of view, you find a lot of the institutions and the individuals here have got a large home bias.
Yeah.
So if you try and talk to them about first-tier Spanish banks, which may be good risks, they don't care. No. What they care about is the name recognition of local bonds.
And they sort of have a feel that these balance sheets are quite okay, right?
Absolutely. So whereas if you were looking at it dispassionately from the US, say, you would look at some of the raw numbers and think this is not a good company. People here intrinsically understand the strength of the company lies not only in the balance sheet but also in its ownership and its control.
Okay.
So there's an arbitrage there where you can get good yields on an international basis for a company which is rock solid locally.
Okay, so that's interesting. So I guess you've been adapting. That's been the main demand that you've had is fixed income. Do you see equity coming back? Do you see that appetite coming back slowly? Or?
I think we do, and actually 2013 I think will look with hindsight to be the inflection point in more ways than one. We took on just over $1 billion worth of assets in fixed income over the last few years. The flows in that area, whilst they haven't stopped, they have actually slowed down a bit, and I think the events of the summer where the Fed introduced its tapering language, that sort of put a halt. People have paused for thought. And what we're seeing now is clients really looking at the equity markets to provide maybe a measure of income and a measure of growth.
Right.
So a popular strategy for us are dividend-led portfolios. So focusing on blue chip stocks in the region with high income yields.
Okay.
Investors are getting 5.5% in dividend yields.
Now, I would agree with that. That's the kind of profile that investments have here. Now, I've been asking this question to several people at the forum this year, and I think we share the same enigma. Why is it so difficult to make global investors understand the opportunity here? It's so obvious.
Yep.
This place is ready. Strangely enough, people kind of bought into the story while they were building it, but now that it's all finished, somehow there's a pushback. What do you make sense of this?
I think there are a number of reasons, and they're all interlinked. One of them is that this is an inefficient market.
Okay.
So this market is poorly researched. If you pile up on a table the investment bank or sell side research on equities and fixed income, you're not going to get a very big pile.
Right.
So it is an inefficient market classically. Also, people have preconceptions about the region geopolitically, and that's fed, let's say, in the States, having lived there for a few years. There's a dearth of information on the region, so effectively people aren't really as educated as they could be on the dynamics. Then when you come down to the way the economies operate, they are actually operated in a way where government involvement is quite strong. So that also, people aren't used to that. People are used to internationally a freewheeling, free market economy, whereas here the developmental hand of the government across the region is still quite strong.
Right.
So I think a lot of these mean that all go together to actually mean that people don't just quite get what's here. Therefore, they remain cheap.
So there's there's a simplified view of a reality. They see it as a top-down thing that they just probably won't be able to understand.
Absolutely, and I think there is a massive dichotomy here in the tag of developing or emerging market. There's no way looking in here, I mean, we're sitting in Dubai now, which is about as shiny and as new as you're going to get anywhere on the planet, and yet people look at this region and think it's actually an emerging market. When you look at the definition of an emerging market and look at here, debt to GDP virtually non-existent, budget surpluses backed by real revenues, and massive double-digit current account surpluses. Now that is a profile that the US, G7 and Europe would die for, and yet it's here.
As someone from the European continent, I can only agree with you.
Absolutely.
Thanks very much.
Thank you.